Hello, hello. Welcome, everybody. How are we doing? All right, a lot of questions starting to pile in. Looks like you guys got in there early and started putting them in. It is first come, first serve basis. We will take them as we can. William said, I'd love to hear you talk more details about what the experience is like after passing the tryout with Apteros. I mean, it depends on who you are as a trader, how good you are, all that kind of stuff. But we're gonna put you on a desk. You're going to be have certain requirements that you're going to need to um, do in terms of putting in the work. You're going to need to share, for example, a daily review with me every day that you trade. And why would we want that? Well, that's because you're trading for me. I want to be a part of what you're doing. I want to understand your trading. I want to start to get to know you as a trader as we see what you're doing, what you're capable of doing, what your goals are, help you set goals, help identify things that you need to do to get better, and just start the development process and hopefully see risk adjusted returns from you and start to scale you up. For those who have, um, are showing promise, we're absolutely going to get you on a team of kind of either people in a similar position or a similar style box, let's say, to get some accountability with peers and just that kind of really nice prop environment and stuff like that. Um, if you are doing really good, for a handful of months, we're going to move you into an even more professional environment. We're gonna, you know, get everything going in terms of, getting a seat for you and lowering expenses and all that kind of stuff. That's the gist of it. Our job is to find people, bring them in, nurture, grow, develop, and size up. That's what we're doing. Javier says, "Hey Merritt, I'm more of a scalper. Is it possible to become a CPT using Adro, where A is only used for DVA, ignoring N? If not, what about just using weekly, monthly DVA, ignoring the rest?" There's no one way to accomplish these things. I think the best thing that I teach the trading world of anything you want to talk about. Some people think I'm good with some psychology stuff, mental framework stuff. That's not my forte. Some people think I'm good at talking, you know, short-term timing and whatever, and they've seen me on intensives and they think I'm good at that. Well, guess what? That's not my forte. You know what the best thing I have is to teach people? It is the narrative. It is that end part. Can you do it without that? Of course. There's a lot of traders out there who are successful without the N in Nadro, right? You don't have to have it. Um, Experiment, stay in sim or small and prove to yourself that you can do it with Adro. um, you don't have to. I think one of the most important things that many amateur traders miss is context. And so when you take the N away, you're taking context. So the latter thing that you said about maybe only using monthly, weekly, keeping it pretty simple in terms of contextual read, I'd be that would get my vote for sure of any path you're going to take there. Daniel says, "Hey Merritt, I've been struggling with this for a week. How can I find good balance to fade? How do you define good balance in a chart on the ES?" Market profile, volume profile. It's absolutely the way to do it. Um, can you identify balance with just support and resistance, price action that's going sideways? Sure. Um, Profiles are a really good tool to simplify that information, not require you to kind of draw trend lines and stuff like that. It'll kind of do it for you, right? Because it's showing where either time is spent or volume is built on that y-axis, and if there's balance, it's going to form a big fat part of a profile. So that's how I like to identify balance, and that would lead you to just talking about value, which we attach to balance, and all that good stuff. Brian says, hey Merritt, how do you differentiate scaling out sooner based on something changing in order flow versus fear or profits? Where's the line between informed decision making and natural human trader instincts? Great question, Brian. The answer to that is process. If you're in a trade and you find yourself taking profits, well, what do we need before you were ever in that trade, before you were ever in a position to say, well, I took profits, was that a good thing or a bad thing? You need a process for managing profitable trades. There can be discretion involved. Just because you have a process doesn't mean that everything is totally analytical and quantitative, okay? You can have a process that allows for some discretionary reads, but the process determines, yes, I saw this thing objectively on the order flow that I didn't like, and my process allows for me to scratch out maybe after a favorable excursion of a minimum amount or whatever, or like I was walking through process in a mentoring group yesterday. One trader allows for discretionary exits of profitable positions only when they get within a, like, I forget what it was, 0.25 ATR of the major destination target area. Then they allow for discretion. Before then, they don't. So having a process for when and where you allow scratching, early exits, if you will, that's the difference maker. And then you can look back in your review and say, wow, that was impulsive. That's not a part of my process. Or you could say, you know what? I thought I saw something on the tape there, and I did. But now that I look at it with the benefit of hindsight and review, I was really overreacting to something extremely trivial that wasn't actually the strong order flow signal that I want to be looking for per my process for exits, right? So there's a lot of different little nuances you go, but you got to have a process. You got to be reviewing your work and comparing how you're doing relative to process, which is what we do in our mentoring groups. Hey Merritt, how does size bumps work for the traders on the desk? Good question. So one of the things that I say, I'm not sure if our website still says this, but it essentially says, look, if you're coming to try out with us, you know who I am, you know what we're about, and you essentially kind of trust us. I think other, some of these, like, I'm going to call them fake prop desks or whatever, they might have like a firm plan, amongst all the other things to try to trip you up. They'll have like a scaling type of program they put you on, and if you do this, then you can trade this number of contracts, blah blah blah. Some of you may prefer that. Go for it. With me, you're gonna have to trust me that, one, I am interested in scaling you up. If you don't believe that, if you think I'm just like trying to run like a tryout business, then you might as well hop off this call. You don't want to listen to me, right? So anyways, it's ultimately a discretionary call of me, the boss. But here's what I look for. I was recently having a conversation with one of our newest guys on the desk. I'm excited. He's an older gentleman. A lot of people are young in terms of traders. This guy's in his 60s, I believe. But anyways, he's passed the tryout. He's showing that he can do some good things. We're currently working with him on identifying areas not to trade, right? Which is an important thing that each of you should do as well. Anyways, what I was telling him and what I'll tell you is I look for risk-adjusted returns on essentially a month-to-month basis. What is risk-adjusted returns? I like to keep it super simple. I'm not talking Sharpe ratios or Sortino. I guess we could, but simply, how much did you make for the month, right? If you're not making money, we're not going to be talking about size bumps, right? So how much did you make divided by, right, or ratioed relative to what was the maximum drawdown over that period, right? So if you made $8,000 in, what month is it? June? In May, but you drew down 10,000 in order to make the 8,000, that's like a negative, that's a below 1-to-1 ratio of gain or reward to risk that you literally assumed, right? That you took on, realized, not even just like theoretical risk, like an R value. You literally took on that risk and actualized it. That's what I look at. So if you're able to start putting up $8,000 months where you're only drawing down 4,000, well, that's 2-to-1, right? Now we're talking about risk-adjusted returns of 2-to-1 for the month, and that is getting into the realm of good risk-adjusted returns, right? 2-to-1, 3-to-1, kind of the minimum range we want to see of what you're able to do, right? If you're consistently drawing down 3,000 in order to make, gain back 3,000, on the other side, it's not that good, right? So, I look at all my traders as trades, right? I'm a trader. How do you think a trader manages his traders? He treats them like trades. Sorry to sound harsh, like there's no human element there, but that is the way I see it. If I'm funding someone, I'm wanting to grow them in terms of size, it needs to be positive expectancy for the firm, right? That's what we need to see, risk adjusted type of performance. So great question. Glad you asked. Is there a way to contact us? I mean, yeah, just any tryout help, just email support at apterostrading.com. It should be pretty easy to find how to contact us. You say you're sure that you're going to pass it. Well, just pass it, right? Talk is cheap. Just pass it. DL says, what do you think about scalping higher number of contracts for smaller targets? For example, scalping 10 to 20 for 1 to 2 ticks as opposed to trading less contracts for bigger moves. I have no opinion on that whatsoever. What I will say is that one way to do it is not better than another, right? It comes down to, do you have an edge doing that? Are you good at it? Does it align with your strengths and weaknesses as a person, as a trader? And if, scalping like that is more suitable for you and what you're capable of doing and what your methodology that you're developing is all about, then absolutely it's better, right? If you're great at scalping, don't try to swing trade. First get better, then get bigger, then get broader. That is a direct quote from Dr. Brett Steenbarger. So there's no free lunch in trading just because you try to change it up and say, well, maybe if I just trade bigger, it's easier to catch moves that go profitably for more P&L because I'm bigger. Well, guess what? It's a double-edged sword. There's no free lunch. Your losses, the bigger losses, are going to come like that just as easily as well. So, you got to figure out what works for you. Yeah. Philip says, hey, Merritt, do you also work with traders focusing on swing time frame and intraday position trades? Yeah, I mean, I consider my bread and butter trading intraday position trading. Yes, there's times where I swing. Yes, there's times where I scalp. But like my core method and really the perspective that I teach Adro from is really as an intraday position trader. What does that mean for some of you? That means I'm looking to see what the market's up to, where the key lines in the sand are for a day, not just like a level that I want to trade, but like truly understanding, like you guys see from my years of DMIs and whatnot. And we'll start doing those again soon. As you guys know, I'm sleep deprived with a newborn and whatnot. Question? Yeah, so I mean, the cool thing about Nadro though is that you can apply it. We had a question earlier about, hey, can I take off this? Only do scalping. Can you do swing trading? Absolutely. I posted my last tweet was about my S&P swing trade. So yes, we work with traders like that. If you are going to swing trade for me on the desk, right? Just as a detail here, you, unless you're really good and you want to like show me your track record, and like we bring you on that way. Um, you can't swing overnight until you become like a senior trader, and you become like one of us on the desk, like truly, right? Like not like a newcomer who's trying to figure it out and isn't increasing size and stuff like that, but someone who is established, moves from kind of junior trader to what we call a senior trader as you get bigger, and then the world opens up for you in terms of again, you're just going to be dealing with me as it currently stands in terms of what you can and can't do. But we're in the business of making money, so we're I'm going to hear you out, right? Let's see. Thank you, Omar. Cotton. I don't know. I don't follow. I don't follow anything on ice. Um, maybe one day. Hey Merritt, I'm not able to. Did I skip a question? Yeah, someone asked a question about Ninjatrader. I don't, or Think or Swim. I couldn't tell you. Those platforms I can tell you are not ideal, as far as I understand, in terms of the base, what it comes with in terms of profiling. Ninja, I believe, offers some third-party stuff. Like you could like Rancho Dinero, I think is one of them. I'm not sure. I've been out of that loop for a long time. But I do know it's probably, from my understanding, it's going to be impossible to do everything you need to do on Thinkorswim. You can get it done on Ninja. You're just going to need the right third-party add-ons or whatever you call them. Another question: adjustable volume charts on Thinkorswim. What alternatives do you have? Tick or range charts? I mean, yeah, you could use tick charts. That's going to be similar to volume charts. When more volume's flying around, the market's typically upticking and downticking more, so you're going to get more ticks. So it's a good proxy. Ultimately, why are you settling in terms of platform, right? If you want volume, get a platform that gives you volume. If you want great stuff with volume profiles and stuff, find a platform that gives you what you need, right? It's not for the most part, the things, at least the things we're talking about here, it's not like it's financially prohibitive, right? You can get a good trading platform and data feed for, all in 30, $60 a month, that kind of thing. If you're trading and aspiring to be in the game of trading, that doesn't need to be financially prohibitive. If it is, you're probably not ready to be in the space. Here, Mark says when you trade and get stopped out, you're able to not get hit with a full loss because you cover some quickly. ITM money, like options trading. Why and what do you look for as targets when you've entered? I mean, you're like implying that I do something. I'm not sure how much you know about me and my trading. Like, um, but yeah, so my general approach is to scale out of some of a position when it begins to work. Maybe that's what you mean by in the money. Um, and so that initial target for me is typically kind of momentum based. So I look at like what are the average kind of rotations looking like recently, right? What kind of volatility are we dealing with? What kind of swings are we seeing? We call that rhythm. Once I have an established read on that rhythm, I typically look for an excursion from my entry at a turning point of kind of the ballpark, of that average rhythm that we're seeing. And then I'll typically kind of hang on unless there's like a reference I'm looking to really aggressively scale out of below. Let's say I think we're going to run stops below like a poor low or something. I might place a limit order down there just to aggressively get filled. Um, but generally, I'm looking to see how far can I get away with it moving and maintaining that kind of direct momentum. And then when it starts to turn, and I see, maybe something on an order flow, maybe whatever in terms of speed of the tape or whatever, that's where I'll kind of take that scale. So that's kind of some variables that I'm looking at for just initial scales. So I, as you mentioned, don't get hit with a full loss. Maybe if it turns around from there. Rest of my targets and all that stuff, that's probably more, involved than we could cover on this talk. One hole says, hope that's a golf reference. Do you think mentors should show their P&L to show if they followed their plans and win-loss via following plans or not? Setups work, but not every time. The hardest thing in trading is recovering. Okay. I think that, I mean, you guys probably know that I don't really share P&L, do I? Number one, that's private, right? Hey, maybe Merritt's just a scammer. He doesn't want to show, P&L or whatever. Like, you can think whatever you want. But here's how it goes, guys. Let me enlighten you. Well, number one, my name is on my Twitter. I'm not anonymous, right? So my father-in-law, sees what I post on Twitter. I don't want people in my day-to-day, whether that's, extended family or friends or whatever, like that's it's not doesn't sound good to me to post those kind of things. But here's how it goes, guys. Anyone can lie to you about anything trading wise, right? First, it's show us your fills. I do that from time to time because it doesn't have dollar amounts attached to it, and it shows thinking, and you guys can reverse engineer kind of how I'm doing some things, and I feel that that's helpful for people. When you show that, typically trolls or whatever, this generic person who wants you to prove things to them. Okay, that's who I'm talking to here. They then want you to show maybe a screenshot of the platform, right, with the P&L. What size are you trading? And then that's not good enough. They want you to show brokerage statements, right? So let me blur out my, address or whatever and show those. Well, guess what? You want a fake brokerage statement? Give me a few hours. I'll give you a fake brokerage statement, right? Well, then that's not good enough. Guess what you need next? Tax returns. You don't think somebody can create fake tax returns and prove what they're doing? You can't believe any of this stuff, guys. Don't trust people who are showing that stuff all the time anyway. See, I'm not saying who to trust or don't. Anyways, that's complicated. What I am saying is, guess what as we've gone, that's my logic, okay? And that's my privacy, things that I've mentioned there. Guess what I do show? What do I show most often? My read at the hard right edge, not like a review of like, oh yeah, this was easy, blah, blah, blah. I show the DMIs. The DMIs are Adro based, right? Which is something that I say is good and you can purchase for money. Here's me showing day to day what it's capable of doing, right? So that is always forward looking and you can't fake it. I do the recap for accountability of here's what happened relative to what I said this morning, right? It's not like with the benefit of hindsight, kind of like, that kind of crap. So anyways, long story short, that's my take on showing P&L and whatnot. Yeah. Francesco says, how does a trader understand it's the right time to switch to live or to try to get funded? I've been experiencing good consistency both in process and outcomes lately, and I'm considering a tryout. Well, first of all, congratulations. If you can't do it on Sim, you can't do it anywhere else. If you can do it on Sim, it doesn't necessarily mean you'll be able to do it somewhere else. But if you can't do it on Sim, guys, you can't do it anywhere else. So genuine congratulations for especially the process part, because that's where consistency comes from. Having a process and being consistent in your approach. One thing I like to tell people is like, I thought about when I designed the tryout, like, well, what might I like to see? And guess what it's based around? The same thing I bump size up with my traders, right? Basic risk-adjusted returns. Make more than the drawdown overall, right? So I don't care about imposing other rules or different things. I just want to see how can you make risk-adjusted returns that meet that, right? So my answer for what I think you might should do in terms of going live or going to the tryout or whatever is simply just show yourself risk-adjusted returns over a decent sample size, right? What kind of sample size are we talking about? a couple months of trading, let's say 2 months, with a minimum of, 30 trades a month or something like that. If you're not trading that much, then maybe go a few more months to get like a decent number of trades under your belt. And then start small. Don't I was talking to a guy the other day. Don't just, you could be worth 100 million, or you could have $100 million trading account. As someone who's just shown that they can do it on sim, you don't need to come in and say, well, I've read I should risk 1% of my account. I'm a wealthy individual. No, don't risk 1% of your account. Start with a minimum number of live micro contracts that you need to trade your style, right? Some people, a one lot is fine. Start with one micro. For some people who need to be able to scale out or scale in or whatever, trade the minimum number of micros that you need. 2 or 3 works for most people, right? So prove it in sim, then start small live, and then start scaling up, and whatnot. So if you're in the tryout, we're going to be scaling you up, or excuse me, once you pass the tryout, that's another proving ground for you as you evolve as a trader and grow. Then we get you on the desk. Then it's about scaling you up and getting maximizing what you can do. Trading Donkey says it's been said that those who can't trade establish prop trading firms. What do you have to say about this? Are you a lousy trader? No. Um, I'm sure that that could be a thing with people. It's not with me. I'm not a lousy trader. Um, for me, it was much more about I am first and foremost a trader. What do I want my life to look like? What do I want my career to look like? And for me, it didn't look like being alone, right? So I have been on prop desk and now I have a prop desk. I like having a team of traders. I actually, you don't have to believe me, but I personally like and am quite good at teaching. Um, so it's like the best job in the world for me. I get to focus on my trading. Um, I get to have the energy and the camaraderie and the idea flow and all the stuff of other successful traders. And it's a great business for me. I really like being in it, and I like trying to develop traders as well with having a course and doing the mentoring. I really like what I do, and it's not because I'm a lousy trader. Do you prefer Taxley says, well, there was a comment. They said they either create prop firms or sell courses. So I do both. So what are you doing here, right? Go listen to someone else. Do you prefer trend trading or counter trend trading? I prefer holistic trading, as I like to call it. I prefer both. So when I talk about context, and we talked about balance earlier, I understand what the market is doing, right, across various time frames. Is it in a balanced state, which is like a consolidation, right? If that's the state, and I'm getting confirmation that maybe one time frame is bearish, and maybe we're at the upper end of a consolidation on another time frame, I'm going to be doing nothing but looking for shorts. And guess what? On one time frame, that's a trend play short, right? It's in a downtrend, and I'm aligning myself with that. And on another time frame, it's balanced or consolidating, and I'm fading, mean reverting type of style from the upper edge of that balance. I don't care if it's mean reversion or trending or whatever. I understand how markets work relative to balance and value ultimately, and using multiple time frames and understanding where things align and where they're dissonant. And so I don't care, I don't have a style in terms of trend or counter trend. I actually see it all and use both. I take what the market will give me. Right, it's hard to find. It's hard to keep track of where I am on the questions here. CVAs formed further out in the past. Example: U.S. trading in this range on the ES last week was a long time ago. There's no question here, sheep. Oh, here we go. Become less exact over more recent CVAs. I mean, I wouldn't call them less exact. Okay, that's a specific thing. I would call them less impactful on the market as a whole, caring about them in terms of significance as to whether we're holding above or below them, right? Which ultimately for me is like they're less impactful at generating a directional bias, right? Whereas recent balance is it's extremely important in terms of, are we breaking out of that? Are we reverting back into it? From the edge. That sets the tone for what I think about that market. So it's a good question. It's a smart question. I wouldn't call them less exact because my goodness, it's insane. The starkest and most impactful memory I have of what older CVAs can do is the night of whatever year that was when Trump was elected. What year was that? 2012, 2016? I don't know. It was insane on that. I was in bed, remote desktoped in and looking at my charts and trading. And as we were going limit down, it was just insane how these old CVAs were just very exacting, but obviously not that impactful to market direction, right? We had more near forces. Do you also limit daily loss for all your prop traders? Absolutely. I don't know any, have never heard of a successful trader that doesn't have a daily loss limit. I know successful traders who have a hard time following them and they have like a risk manager that takes them out, because they can't do it themselves. That's the thing for some risk seeking, kind of egotistical, traders and whatnot. And I like to say I used to be one. Haven't done something like that in a long time. So absolutely. Miko says, how do you use stop losses? Do you trail them or keep it the same level under the whole trade? Balance long and it goes imbalance up, for example. How would you put your stop? Well, it depends, right? You gave a couple different things there, and I do different things depending on the trade, depending on the strength of the narrative, the quality of the trade, let's call it. How much risk reward is left on the table, reward that is. Short-term conditions, order flow. There's a lot of things that factor into that. But in general, if I'm taking more of a range-bound intraday entry, right? Again, there's multiple time frames, multiple either trending or range-bound things are going on simultaneously. So for me, my execution chart dictates the initial trade management tactics. So if I'm taking a mean reversion intraday trade, regardless of what trade that's getting me into, the stop is going to be fixed for a very long time. If it transitions to imbalance, as you discussed, I'll transition to an imbalance kind of trade management scheme and start to trail that stop and whatnot. Brian says, absolutely. If you need to find one piece of info, I'll look back over years of your Twitter or your Q&A trading videos posted to reverse engineer something. Yeah, I mean, I did that to guys when I was, green behind the ears. I had spreadsheets of like the calls they would make and the trades they took, and I tried to put together what were the commonalities of how they were doing what they were doing, and it's cool. If it essentially, do CVAs form further out in the past or less? I think we already covered all that. Mark says, general rule for how much you want to take out of that initial scale so that your risk reward isn't going to be heavily influenced by initial scales when you aim for larger targets. Context. If it's a big narrative play, I'm going to take a very small amount of initial scale off. If it's more of a scalp, I'm taking half or 2/3 off on the initial scale, right? It just depends on how much I'm aligning myself with a tailwind, right? If I'm just trying to pick up pennies in front of a steamroller, I'm taking larger profits, as in more of the size off quicker. Would you ever consider allowing your prop traders to trade using TradingView? Yeah, I mean, I don't really care ultimately. Right now, we're all on Sierra because that's the system, and routing we're doing. That could change in the future. But yeah, I mean, yeah, I would allow it as long as it worked with our systems. Currently, it doesn't. I don't care where someone executes as long as it's, we're able to manage risk. That's all that matters from my seat. We've kind of already covered this. Is Nadro beneficial for scalping, or is it more of swing trading? It's Nadro is just a collection of frameworks. It's up to you to apply them on the time frames, right? Because scalping versus swing trading is ultimately a major time frame topic that you desire. Hey, Merritt, do you think it's better to trade only a single instrument and specialize, or alternate between them according to market conditions? It's a good question, Lucas. Um, it depends on you. It depends on market conditions, kind of, but it doesn't have to. It mostly depends on you. Here's my short answer. Or I'll tell you what I do, which would be the same thing as the short answer, I suppose. When volatility is higher and things are kind of flying around, I'll tend to just kind of keep it simple and trade one instrument. Why is that? There's plenty of opportunities for me to do well. Obviously, I could do poorly as well, right? I'm not saying that I always do well. But there's opportunities to do well, a lot of them in an instrument that's flying around and has a lot of volume and volatility. That's just the way it goes for any short-term trader. However, when things kind of get quieter or maybe grindy, summer trade, whatever, um, and this is the phase I've recently, or you know move I've recently made, and I've been back and forth for years on some of these things in terms of what's the conditions. So as we know, volatility's dried up a good bit compared to what it has been, and so I've gone back to, after what feels like an eternity of just kind of focusing on S&P, Nasdaq, little crude oil, but mostly those indices. Well, now and recently I've taken trades in copper, gold, crude oil, the pound, the euro, the S&P, you know, um, and I follow even more markets than that. So that's the thing to me, is what are the overarching conditions? Is there a lot of opportunity in my kind of favorite instrument? If so, I'll just probably grind it out there. If there's not so much, then I'm gonna go try to find where the most fertile ground is, right? And use that. Shorted in Q, intraday swing high for an overnight short. What do I think about it? Let's pull up in Q. So I wasn't going to talk about my position, but I guess I will, because it's similar to ES. So as you guys know, I was short over the holiday weekend. I had that put spread on that I sent the picture of and whatnot. I actually came out of the bearish leg of it today and left the long position on, wait, call spread, not a put spread. I was short a call spread, sorry. Um, so I didn't like the fact that the S&P couldn't hold. I think it was like a 2025 level earlier. And I started seeing some order flow issues down at the lows of the day, and I actually released that, and would be happy to put it back on, but I actually have only long exposure right now in the S&P, even though long term I don't, it's not a comfortable place to be long. Medium short term, I didn't want to be short anymore, and I decided to take those profits. So I kind of feel the same way about NQ. NQ could go way, way lower from where we are, like a healthy pullback, right? It's been a huge run up. Um, but currently, I would stay bullish in Q off of kind of today's lows where we reacted from, like the call it 15,170. That's kind of like a good line in the sand for me currently with NQ. So, all right. We'll take one more question. Sorry, we're not going to get to all of them, guys. Um, Still getting trolled, but that's okay. Your take on HFTs? Oh, I don't know if I want to talk about HFTs. I'm just gonna say ignore HFTs. They're no possible way they're meaningful or impactful to you in your trading unless you're trying to be an HFT. So let's just forget about HFTs. Trust me on that. Yeah, just noise. All right, so we'll answer this one from William. After traders pass your tryout and is on your desk, how much details do you require them to be shared with you about how the trader's strategy works? Well, I mean, you know, I am looking to understand that trader and help that trader. So, again, we've talked about lying a lot here today. You could lie to me, withhold information, and say that you're trading something and that's not really what you're doing. Um, you're not going to get any help from me, right? You're not going to, um, because if I don't know what you're doing and what you're trying, in terms of logic and how you're executing relative to those plans and stuff, then I just simply can't help you. So if you're not interested in my help and you just want to be funded, there's other places that will give you more of a profit split, right? So I would suggest you go there. If you do want to have an open relationship with me in terms of what you're doing and your strategy, then could be a good fit. All right, everybody. Thanks for hanging out. Hopefully, some of this has been helpful to some of you. That's the goal here for these meetings. And have a great week, and we'll see you next time.